Welcome to another episode of Selling South Bay. I am here with a great guy, especially a good friend of mine, and one of my preferred lenders. So, Chris, thank you for the opportunity to talking to you today. And we're going to be talking about mortgage. Chris is with this great company, CrossCountry Mortgage, and he is a very experienced lender. Actually, I've been working with him for several years, and he has always delivered. Chris, welcome.
Thanks for having me, Aaron. It's a pleasure to speak on your station here. I love to talk to all of your clients and let them know exactly what I can do as a mortgage professional. So ask away. What can I do for you?
Well, first, tell us a little bit about you. Who are you, Chris?
Well, my name's Chris Rivera. I work for CrossCountry Mortgage. I've lived here in the South Bay all my life, except 2 years when I moved to Long Beach to attend Long Beach State. I've been a mortgage professional now here in the South Bay for going on close to 30 years. I've seen a lot in the real estate industry here in the South Bay. I've seen it grow. I've had the opportunity to meet many quality individuals like yourself, to work with them, and to help so many people realize that home ownership dream that they've had. But I'd like to take it back to how I got here. And, I really didn't even know this job existed when I started. I didn't know there was a mortgage broker or mortgage banker or anything like this. But I am happy to say I'm one of the few people in America that can say they went to school and they got a degree in what they do for a living. And I say that because when I went to college, I went and got a finance degree with a specialty in real estate and law.
Oh, wow.
And all of that really helps me do what I do because I truly understand the real estate market itself. The law end of it helps me with the contracts. The finance end of it helps me with just navigating the ups and downs of the market, where interest rates are headed, that sort of thing.
So we're definitely going to talk about that, by the way, because we are in a very interesting market.
True, we are. So all of that really helped me stay in business for as long as I have. But that's really about me. I'm just, a family guy. I've coached my son's soccer teams here locally in Redondo Beach, AYSO, and even North Torrance. Had the pleasure of meeting so many quality individuals and being able to help give back to the community and get to know my kids' friends. But, at heart, I'm just kind of a guy's guy, really.
Well, and I definitely appreciate your business side, and the one thing that I do appreciate the most is your friendship. And but let's get down to business. Interesting enough, I was in banking for 25 years, so I was in the other side. Mortgage bankers were kind of like the second choice in our world, but after switching to real estate and starting to work with you, I started to figure out how much easier it is to work with a mortgage banker. And I mean, unless I have to, I go and do loans with large institutions. There's just a little more to do, and you make it look so easy in a way that the way you just handle the transactions, the way you just help my clients, and they greatly appreciate it. And of course, in my business on real estate, the lender plays a huge role. We have to be in alignment to make sure we get to the finish line. Because, well, I don't get paid if we don't get to the finish line, right? And our clients don't get their house, and you don't get paid. So it's a team effort, and we always make sure it happens and it goes smoothly. And it usually does. So, well, let's go ahead and address the huge elephant, right, in the room, and that is our current market. What's going on with the rates? Can you tell us a little bit so the public here can understand what is going on? I mean, I understand inflation, I understand all these things, but can you please break it down to where my audience can go ahead and understand it?
Wow. Okay. So I guess I get the task of starting at the hardest question first. This market has really been chaotic over the last 8 months. Started right about the beginning of the year, and interest rates started to take off on us. And a lot of it had to do with the inflationary pressures that were there and really just started to peak in the beginning of the year.
Yeah.
but have really started to manifest in our economy now over the last 3 or 4 months. And the Fed government has really done a lot to try to curb that. Unfortunately, a little too late, but they are trying to combat that by raising short-term rates, which they've done significantly over the last 3 or 4 months. And again, we'll do it later next month, September 21st, at the next Fed's meeting. That's put a lot of pressure on rates to increase. And I think what's going to happen over the next several months, well into probably 6 to 12 months, is we're going to see rates continue to increase as the Feds continue to raise short-term rates to kind of combat inflation. It's putting a lot of pressure on the markets to kind of have to digest that and engulf that into mortgage rates. And that's why we're going to see rates probably, unfortunately, hover above 6% for a short period of time before we start seeing some relief, probably in about the first, second quarter of next year, where we might see them slide a little bit, but we're probably going to anticipate them being in the mid fives. All of that's crystal ball thinking at this point. No one really has a direct pulse to be able to tell you exactly what's going to happen in 6 to 9 months on rates. All we can do is look at the data that's in the marketplace today and know what the direction of the market is. And everything that I see, everything that I read, all the people that I'm listening to, the bond market gurus, are all telling us that we're in for some tough sledding ahead, that we are going to see rates continue to rise, unfortunately. So that's really it, Aaron. I mean, that's the bad of it. The good of it is because rates have risen so drastically over the last 8 months, it's really allowed buyers to be able to have a chance at getting a home. And I say that because there's less competition on the offers that we're making now, because of the demand on the buy side has diminished because of the rates rise. We've seen some offers now getting accepted that otherwise wouldn't have just 8 months ago. You've been doing this for quite some time, and you know what I'm talking about. Last year and the year before, where every time we made an offer on a property, we were faced with going against 20 other offers for that property. So there's some good that has come out of the higher rates.
And that's what I was going to say. That is the effect that is having. And I think that in a way, that was the purpose, to be able to slow it down. At the beginning of the year, we were having, any property we put on the market will be, the buyers will be competing with 20, 30, and in some circumstances, even more offers. So you can just imagine how difficult it will be for especially first-time home buyers to compete with that. So what do you see? Do you think inventory is going to continue to build up a little bit? Because, we have the other side of this, right? Because in California especially, this is an issue across the country, but in California it's even more evident that the shortage of homes.
That's true. And it's really hard to say, but my gut feeling is no to that question. The rise in values that we've seen over the last several years has a lot to do with two factors. It was the low interest rate market that we saw start about 2.5 years ago, right after the pandemic, or the start of the pandemic. And then the other side of the equation was the scarcity of homes that were out on the market.
Right.
So you've had two significant forces coming together that led to just incredible increases in values here. We were seeing 20% gross plus over the last year and a half. And that's just unsustainable for any economy, really. Yeah. But going to the root of it, the Feds have raised short-term rates, have raised rates in the last 8 months to the level of the demand diminishing a little bit. And really what they're trying to do is curb that inflation and try to get to a nice little equilibrium between buyers and sellers, which is starting to happen. But to answer your question in regards to the seller side, because that was the other side of the equation that led to the rise in values and home sales, is will there be more home sellers? It's hard to say. And the reason for that is because where are they going to go? Right. Until we can actually start to manufacture homes, or build homes, I should say, so that the populace can go out and buy those homes to free up the homes here for us to sell. I don't see the seller side coming back anytime soon. And with that said, I don't see values in our area going down either. I think we're going to see a very strong market here in the South Bay. Not saying we're going to see 20% again, but we probably will see low single digits, somewhere between 4 to 6% rate of growth, because people won't really have to sell unless there's a need.
And I'm actually just on a webinar recently that is the projection, actually 4 to 6%. So and that takes us to the question the most buyers answer or ask, and that is, when is the time to buy? When is a good time to buy? And my experience is that you buy when you are ready, when you can, and when you have the credit, when you have the down payment, and the job security. And sometimes people say, well, let me wait until the prices go down. And this is the uniqueness about this market, that rates are increasing, but yet prices are increasing as well. The norm is that when the rates go up, the prices actually go down. But definitely we're not in the same situation we were 5-6 months ago, to where it was just no end. People were overbidding, overpaying for properties, and that was driving the prices even higher. The comps that we had 3 weeks in the past were not, by the time you close escrow, you had a totally different number, and that was just out of control. So now we're coming down to where it's leveling off, not going down. I mean, we're not going to have what happened in 2007, is my opinion. What do you think?
Definitely not. Nothing close to what we saw in 2007, 2008, in the next couple of years after that. That was more of a economic meltdown that, unfortunately, a lot of factions within the real estate industry contributed to.
Right.
Not just the mortgage side of it, but we had the investors at Wall Street that played in with all of these 5-year ARMs, stated income, stated asset programs. They were loans that were designed to really blow up, and they did blow up.
and that's exactly the expression that I use when I refer to that. During that time, I was in banking. I was working with a very conservative bank that were doing things correctly. I mean, you have to have a little bit in the game. And at that time, I mean, people were buying. I remember hearing from people buying properties and getting money back. I mean, there was all kinds of things going wrong at that time. But let's talk a little bit about some of the things that you do. I know you've done first-time homebuyer trainings at the chamber office with me to some new home buyers. But here at the office at Keller Williams, I know you have some great success with that. Tell us a little bit about it.
Yeah, I've like I said, I've been doing this for close to 30 years now, and I've had the opportunity to do a lot of seminars. And you'd asked me a question earlier about why I do what I do, and I really think deep down the reason why I do what I do is I like helping people, and I know that I contribute to society because I help people attain wealth. And one of the things that I love doing is doing first-time homebuyer seminars or down payment assistant seminars to really help people learn how they can buy homes with little to no money. Because I really believe in it to the core that it's the single greatest investment you can make for yourself is to buy a house. It's the best way to build wealth for your retirement. But the seminars that I do have just been amazing. And in fact, I just did one last weekend that we had about 80 plus people attend.
That is a lot of people.
It was quite the turnout. It was more than I had anticipated. It was a great turnout. But what I've heard was people were really starving for this information because the last couple of years, people realized they couldn't buy a home because they were competing with people that were coming in with all cash, large downs. And they were going up against 20 different offers. So they really didn't have a chance if you were coming in with just a little down payment. So now that we see the market shifting and sellers willing to entertain more offers because, well, they're not getting a lot of offers in some places, right? These down payment assistance programs now are at least starting to take a foothold. And that's the reason why I love giving these seminars, to educate the people so that they can buy something with little to no down.
Well, Chris, I got to tell you, the new home buying seminars or new buyer seminars, I mean, they do help a lot of people. Sometimes people say, I'm going to buy soon or I'm going to buy someday, but until they come to an educational seminar and they cannot get a roadmap on what they need to do, there's really nothing happening anytime soon. And in my experience has been that working with a first-time home buyer, there's such a fulfillment because I give keys all the time, and it's very different when you give keys to somebody that has owned a home before and buying another one than when you give keys to somebody that's buying for the first time. I mean, that's the moment that you realize that you are doing this, or that I'm doing this to help people. Because I mean, those families are so excited, and thank you for being part of that, and for being sort of in my corner, in my team, to get that done, because that is really truly fulfilling for me. Chris, what is the best way for people that either need refinancing or need a new mortgage or even shop for rates? I mean, I always recommend check with a couple of lenders because you want to get the best pricing as possible. What's the best way to get a hold of you?
Best way to get a hold of me is probably my cell phone. Secondary would be my email address. So my cell phone number, 310-782-4039, or you can reach me directly via email at chris.rivera@ccm.com. Love to hear from you. Love to help you obtain wealth in this great nation of ours. And it all starts with just a single email to me, and I'll get you on that homeowner's path.
And there's nothing like talking to a lender before you go shopping, because that way you know exactly where you need to be and where you need to be looking for your home. I truly appreciate your help with this, Chris. And we're going to go ahead and put your information on the video so people actually have it just in case they didn't capture it. And once again, this is Aaron Alcides with Alpha Real Estate Group at Keller Williams. And if any business out there in Torrance, Lomita, or Gardena are looking to be part of this series, please give me a call and we can set up a time that we can have a great interview and promote your business. Thanks, until the next episode.